Hi everyone. Going to talk today a little bit about value in trading and how price moves around a value level or values levels. I think this might be interesting for you and useful for you in your own trading. So this is the DAX, German stock index, just coming up to 8 o'clock this morning. And when I'm trading the DAX, I always do the same sort of analysis early in the morning. And what I'm looking for, is the market in a downtrend? Is it in an uptrend? And what range is the market trading within at this point in time? And you can see that the price bars early in the morning are really spaced out, very small, not a lot of price action going on. And the market, German stock index, pre-market opens at 7 a.m., which is here. And this is where the price bars become a little bit larger. So the important levels on the chart here are this level here, which is 13,000. That's the highs on the chart, the overnight highs just above that. We're looking at this 13,000 level, round number level, as being an important level this morning. And you can see the lows down here at 12,960. So, as always, these are important levels, and it's the pre-market range that's been established within the market that I'm looking for price to make some moves within in the early stages of trading in the morning session. So, will the market trade within these boundaries, the upper boundary being here, the lower boundary being down here? And will it bounce around inside these boundaries, or will it go to one level and break out? You can see that the market's been in a downtrend, so small downtrend coming into the open. There's a high, lower low, and then just here you can see that there's a low here and a higher low here, so that could be important coming into the open at 8 o'clock. But largely the price has been trading within the last hour, just under the last hour, within this boundary here, very small range, and therefore you'd expect the market to bounce out of that range, to move out of that range at some point in time early in the trading day. And when it does, if it moves upwards, it breaks the downtrend, this downtrend leg, and if it goes down, then obviously it confirms the downtrend leg that's been established in the market so far. So be looking to see what happens here. The market overall has been in quite a long uptrend now. It's been moving up for several weeks, and that's the dominant direction that the market's been taking. So only small move upwards yesterday. When I was approaching the market this morning, my preference was for the market to continue rising. And obviously, you're in a downtrend, you're looking at a downtrend, you need evidence that that's the case. But what's been happening over recent days is that every time the market's dipped like this, it's then the buyers have been coming in and moving the market higher. Big buyers in terms of the banks and the institutions. And if you've been watching any of my videos, you'll know that I hold great importance to the banks and the institutions. They're the big money in the market, and they're the ones that they're the traders that I observe, that I try and figure out what they're doing, what their moves are, so that I can trade on the back of their big money. And for small retail independent traders like us, it's important to be able to read the markets and be able to read what these big institutions are doing. So anyway, coming into the open, this is what we had. And you can see that we've got the 20 EMA, the 8 EMA on the chart as well. And the market's been moving down underneath. Every time it's come up above the 20 EMA, it's moved back down. And it's only just here that the market has moved above and closed above the 20 and 8 EMAs. And so we'll be looking to see in the early trading what actually happens. And we've also got the moving average convergence divergence indicator on the chart as well, the MACD. Okay, so moving into the open, the first bar of the open was a bear bar, so a bearish pin bar, rejection on the top, and prices moved down. And don't forget that when you get these type of bars, that's a good sell bar. That, you know, there's a potential that traders are going to be entering below the low of that bar for a continuation of the downtrend. However, when you've got lows here, and lows here, and every time it's got to this level, the buyers have stepped in and moved prices upwards, you've got to be cautious with bars like this. So I needed more evidence, and you can see why that's the case. Big bullish bar that follows. And so by this time, I'm suspecting that the market has changed in shape somewhat from this downtrend leg to potentially being in an uptrend. You can see that the slow line of the MACD is pointing upwards, and very often with prices they obviously they move up and down, but when the slow line of the MACD indicator is pointing up, then it's likely that for a while prices will start reverberating upwards, and when it's pointing down, then they reverberate downwards. Okay, so that's roughly how I use the slow line of the MACD indicator. It's a guide really as to whether prices are more likely to go up or down. But obviously price is the fundamental, it's the first indicator and really the primary indicator that you use. Obviously the moving averages are only influenced by price itself, so it takes price to move down to alter the shape of the moving averages. Anyway, the market comes down again, and it's a bear bar, but it's not a massive bear bar. And actually I took my first trade by entering long at the close of this particular bar, expecting the market to come up. I was scalping this morning. I was looking for small trades. Normally on this market you can see the gaps here, 10 points. That's what I'm looking for to take my profits. I'm looking for a 10-point gain, and we got in just below the 12,970 level, so I'm looking for 12,980 to take profits. And the market allows us to place our stops because of the range that's in the market at the moment here. Higher the range, lower the range, small range. So stop was down here somewhere, nice and wide, to leave the market a little bit of time to breathe, and the market started rising. You very often find that when the slow line of the moving average convergence divergence indicator, the MACD, is pointing upwards, then anytime that there's a bear bar, then the market, the traders, the big traders will buy. So the market starts moving up, and it's moving up, as you can see, to the 12,980 level, and just makes that level, just able to get out with my profits on that particular long trade on this bar here. Just touched it, just in an instant. Didn't quite get my 10 points on this one because I took my profits and the market had already slightly moved down. But anyway, that was the first trade. So you can see that the market's come up, and it's come up to above these highs here, and it started rejecting back down again. Market rejects back down again, comes to near the lows, but it creates a pin, rejection pin at the bottom here, and if the market starts going up now, it's creating a higher low. So you've got a lower low here, potentially a higher low here. Good rejection on the bottom of that bar there, and when the next bar starts going up, moves above the high of this pin bar, then it's giving the indication that probably it's going upwards. And I took my next entry here, which was long just at the close of this bar. I love to take these scalp entries around about the 8 and the 20 moving average levels, because often the market will put in a spurt and then come back down again, and as it puts in a spurt, at the top of that spurt, hopefully we get out for our profits. And this is what scalping is all about, of course. And so that wasn't quite enough for me to take profits on that next bar, and the market went up and it did allow me to take my 10 points of profits just up here. Market's now breaking out of these highs here, and it's starting to become an uptrend. So higher low, and we're higher highs here now, so it's in an uptrend. It's moved above this high, so higher low, higher high, already confirmed because the market went above this high here, and the market's moving up. Some bearish pin bars here. This is why just trading based on candlesticks can be damaging for your trading, because you always get good bear, good shorting signal bars in an uptrend, and it fools people, and it fools people other than the institutions who know what's going on. And the institutions, they use the moving average levels as buy signals in an uptrend. So the market comes down to the moving average and they buy. The market comes down to the 8 moving average, they buy. The market comes down to the 20 moving average and they buy. And it's only when they don't buy at those levels that you've got an indication that the market may be ending its trend. But anyway, in this case, the market continued going up. And by this stage, you can start thinking about drawing in a trend line. So, possible trend line there, and the market continues going up. Now this is a good opportunity. The market's come down to just about the 8 EMA level. It's just below 13,000. It's at the 12,990 level, and the 13,000 level being a round number, it's a good target point to potentially take profits. So I go long as this bear bar here closes. The market starts pushing up, and then again just about reaches 13,000 to allow us out, and it comes back down, breaks the trend line the provisional trend line that we'd put in, breaks that slightly, and it also closes below the 8 EMA. So this stage traders are on alert, and in an uptrend, in a strong uptrend, the market, as I say, you get these bearish signals and the market ignores it and it carries on pressing upwards. Now we can alter the trend line because we've got more information now. So that's where the trend line is functioning now. We're running across these lows here and this low here. The market carries on pressing up, following this trend line quite nicely, adhering to that trend line quite nicely. And you can see, if you're thinking about, I was talked to you a little bit at first about value, you can see that, you know, this line here is probably the low of the value area. There's a middle in here somewhere and the upper level of the value, which may correspond with some sort of parallel line here. So you may be able to see that if you look at these bars here, let's draw one in the middle, that price is fluctuating. You know, it's got an upper level to it, it's got a lower level to it. When it comes down to the lower level, prices start going up, buyers come in at these lower levels. So tentatively we'll leave the lines drawn in like that. You can see that price is moving along the lower half of our value channel, if you like, here. Price is pushing upwards gradually. It's now above 13,000 level, and market's pushing up. Still within our value channel as the prices continue to move upwards. You can see now it's moved into the upper channel, and it continues to move upwards. This price action here broke the trend line slightly, so it's always wise to, just when that sort of thing happens, to just alter your trend lines. So as this price action's unfurled, I've just altered the trend channel slightly so that it fits better the price action. So we've taken the lower trend line from this low here and this low here. We've then drawn a parallel channel line in using these highs, and you can see that the market's adhering to that, so that's fine. And we've just put a middle line in as well, so the market's been hugging the lower level, weakening of the trend there, and then we get above the 13,000 level and the market starts accelerating away. And this is an important point here because the market's broken the upper channel, the upper level of value, if you like. This is a rising value channel. The value is, the average value within these prices here is rising, and the market shot out of the top. And when it does that, then it means that the market has put in an extreme of value. Very often, well, the market always moves within periods of momentum and regression, and when you've had a period of momentum and it's exceeded the high of the value range, if you like, then quite often you get some kind of pullback, and you can see that that's exactly what happened here, reacting to the bottom of the value channel here and pulling away from the value channel now. And so you can see that this value channel is now redundant in terms of the price action that's unfurled since then. And there's a new value, a horizontal value level now, established by these bars here, which would have highs and lows accordingly, and a center value level probably somewhere here. And it looks as though it's coming down to form a bearish value channel now. So this is how the banks and the institutions work. They're not always precise with their entries. They don't really look at candlesticks in the way that retail traders do and take their entries from candlesticks. They take their entries and they take their profits based on where price is in terms of value within the market at any time. When the market's in an uptrend, then they'll buy at the bottom of what they perceive as the average value for the time period that we're looking at, and they'll sell at the top. They'll take their profits at the top of these value channels. And the value channels can be rising, they can be horizontal, or they can be falling. If you're looking to advance your trading techniques, then this is the type of thing that you need to be understanding, and it'll enable you to ride on the back of the institutions and the banks. I hope you found that useful. Hope you found that interesting. My name's Anthony Beardsall. If you want to learn to trade, then at the Excellence Assured Trading Academy, we've got a Forex and a day trading training course that will teach you all about how the markets work. So if you're looking to learn to trade, we've got those training courses. Also, I provide coaching to developing traders. So, hope you found all that useful. My name's Anthony Beardsall. Catch you on the next video. Bye for now.